You're watching today's video technical update presented by FX Times. It is Thursday, May 13th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the forex markets. Today, I'll take a look at the pound dollar, euro pound, pound yen, and Aussie CAD. The sterling is being pressured more than the euro this week. In the commodity-related currency front, the Canadian dollar is outperforming the Aussie. Finally, the pound yen today is reflecting the current risk-averse environment, although it is within the context of sideways action throughout the week. This video is being produced at about 3:45 p.m. Eastern Time near the close of the US session. Starting with the pound dollar pair, here's the 4-hour look. As we have been following this pair, we saw that it came down below 145, but there was a sharp rejection, almost a 200 pip tail here. And the market sort of went in sideways action until today, where the market broke below this rising support as well as this previous minor low here. So that was a signal that the market may be heading back towards the 145 and maybe even below that towards 144, 144.50. The RSI broke below 40 here. It's showing the bearish continuation, so we can anticipate further extension of the current decline. Looking at the 1-hour time frame, we also see here that we have the daily low is below our previous three. So the low today is lower than it has been this week. It's a new low, and therefore another signal that the market should come down to test this previous low at least. RSI is over in the oversold area, but is also very bearish. You see this attempt failed and came right back down, so this is a continuation signal. Price action reflects that as the market continues to break below this minor low at 1.4620. So it's actually at 1.4620. This is a little bit above that, so it is creating a new low. So watch this pair as it attempts to create another low near 1.4445. If the market breaks below that, we should look at the daily time frame and maybe even weekly time frame, and we would see here is the low. Here the previous low here around 1.36 could be reached. The low here would be around 1.3750, 1.38. So if the market breaks below 1.44, the 1.38 area is the next support. Here's a rare look at the Aussie Canadian dollar pair, as we want to compare the commodity currencies. We know that commodity currencies correlated with oil and gold have been performing very well. So here's a comparison. Here's in the weekly. We saw that much of 2009 the Aussie was the stronger pair, and then towards the end of 2009 the pair sort of consolidated. Here we have this year so far we've been in sideways action. Okay, now looking at the daily, we see the sideways action throughout 2010. We see the RSI sort of edge up a little bit, but our highs in the price action didn't really make any advances. So that was a very bearish, no, not very, but it's a bearish signal when the RSI crossed down and actually had a bump here, stayed below the 5-period moving average of the RSI and continued declining, broke below 40. So that's the bearish signal here. And actually in price action we saw the market break below this level, which is the 91.95 level, or close to the 0.92 level. So when the market broke below that, that was that signal further decline towards 0.8950 area. Okay, and that would be coincident with this rising trend line that you see here in the weekly. Okay, that goes back here, and that's also coincident with the 200 weekly moving average, something that long-term investors and traders do look at. So you do have to pay attention to that moving average. So here today we had the Aussie advance against the Canadian dollar pair. So we might be developing a pullback from which we can confirm this breakout, which is good because whenever you have a pullback, it gives you better reward to risk ratio and also extra confirmation. Okay, so looking at the 4-hour time frame, we see this break and we see this rally. Actually, now looking at the 1-hour time frame, I was showing this in the Charters Corner yesterday at why we would be expecting a pullback. The market here, you saw the RSI form a divergence, and now here the RSI was very strong. It showed very strong momentum, but the price action pretty much remained subdued. So that's another bearish signal even in the short term. So wait for this to top off, and then you can anticipate further decline towards 0.8950. Okay, so that's the target after pullback if it confirms. And here we could see that it is at the 0.8950 area. Here's a look at the euro pound pair. We saw that the euro in the first half of the week slid against the pound. However, by Wednesday, the market started to rally. The euro pound started to rally, and showed that the pound was under more pressure. Now, both of these currencies are pressured, so it's not one currency. It's not a showing of euro strength, and this decline here is not a showing of pound strength. This is just showing that the pound is under more pressure at the moment. Here we see this rally retrace to 38.2%. A break above that should look at 0.8635 area. Pretty much the opening gap of the week is to be tested if this current moving average doesn't hold and 38.2% doesn't hold. The RSI price action suggests that it won't, and that the market should come up to around 0.8650 area to test this gap. Let's see, 1-hour time frame pretty much shows that we are breaking out. We broke out of 60. The RSI broke above 60, and we are in a bullish mode in the short term at least. And so here 0.8650 area is the short term or even near term target. Now looking at daily, so back to 4-hour first, and then now back to daily time frame, we see that this may be a developing double bottom. The market failed to break below 0.8450, 0.8440 twice. And here's another rally. Again, this area highlighted here is the 0.8650 area, which in this case is just below the 38.2% retracement of this entire swing from March. Now if the market breaks above that, so looking at the 4-hour time frame, if the market breaks above this area and closes the gap, this is going to be coincident with testing our 200 moving average in the 4-hour. So that could be further confirmation if the market can break above this 200 moving average. Then looking back at the daily, it's likely to come back up here to around the 0.8850, 0.8870 area, where the 61.8% retracement area coincident with the 200 moving average in the daily. Okay, so basically two targets. First, 0.8650. If 0.8650 breaks, then possibly 0.8870 is the anticipation for this pair. Finally, let's take a look at the pound-yen pair. We see it sliding, closing up the gap that started the week. So risk-averse, reflecting the risk-adverse environment. This is a very bearish signal as the market failed to break above 139, which is this important power line. Support here, support here, support here, resistance here. So now it's tested as resistance again. So bearish signal there in the daily. 4-hour time frame, we're breaking this previous minor low and also closing the gap, also very bearish. Also the fact that the market failed to break above 61.8% shows that this is indeed correction and should continue the further decline. In the 1-hour time frame, actually let's just stick with the 4-hour time frame. A target projection could be such a you know, we could match these two. So this goes around to about 129.50 area or 129 area, which is about the 150-161.8% extended retracement of this rally. See, I truncated the tail because this is a weird action and I'm not going to include it. So that's the anticipation for the pound yen pair. And that wraps it up for today. Visit fxtimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.